Let's get to the point. Your monthly market report from the Reno Sparks Association of Realtors. I'm John Graham, 2017 president. This month's report is brought to you by Caliber Home Loans. First, we'll take a quick look at the local real estate market and get to the point. The February median price at $320,000 was up 6% from January and up 10% from a year ago. We'll look a little deeper into median price and what it means to affordability in just a few minutes. February unit sales at 374 are up 3% from January and up 2% compared to February 2016. The slowdown in sales in February is a typical seasonal trend. For the past 6 Februaries, unit sales have averaged 402. February new listings are up 28% to 488 compared with January and down 16% from 1 year ago. The Reno market remains in a seller's market at 4 months supply of inventory. Month's supply of inventory is the time it would take to exhaust the active and pending inventory at the current rate of sales. We're introducing a new segment this month, the Monthly Economic Minute with Elliot Eisenberg. Elliot is a nationally acclaimed economist and the author of the weekly blog, Graphs and Laughs. Elliot, tell us what we can expect with interest rates this year.
Hi, this is Elliot Eisenberg with the Monthly Macroeconomic Minute. The key question in everybody's mind right now is, when is the Fed going to raise rates and how many times are they going to do it this year? And it seems now the Fed's going to raise rates later this week when the Fed meets. And the reason is the Fed wants to give itself the opportunity to raise rates 4 times this year and not the 3 that they've kind of scheduled in. 3 rate rises would have meant a rate rise in June, 1 in September, and 1 in December. By raising rates now in March, they give themselves a chance to raise them in March, June, September, and critically in December. And the reason this is important is because the economy is fundamentally doing better now than it was just a couple of months ago. Job growth has been very good. Inflation in Europe is going up. Wage rates here are going up. The economy in Japan is doing better. And the likelihood is that President Trump will pass some sort of stimulative measures. If these things continue to do well and Trump passes these measures comes, June or July or November, we're going to have more economic growth. We're probably going to have a little faster growth, but most importantly, we're going to have more inflation. And the Fed wants to tamp down inflation just slightly so that it doesn't begin to get out of hand. And the best way to do that is by giving it an opportunity to raise rates up to 4 times this year. Thanks very much. Bye.
Thank you, Elliot. Let's take a closer look at how median price has evolved over the past 5 years. This chart illustrates a growing gap in median sales price between the Reno market and the Fernley market. In 2012, the median priced home in Fernley was 50% less than Reno. Today, the median priced home in Reno is 37% greater. An examination of surrounding communities show that Dayton, with a median sales price of $232,000, is 28% less. The Carson City area, with a median price of $259,000, is 19% off the Reno market. Putting it all together, with the continued upward pressure in pricing and projected increases in interest rates, buyers may be faced with the difficult decision to look at alternatives either in the rental market or surrounding communities. Upon the completion of the Southeast Connector and the USA Parkway, the obstacles of a long commute from those areas surrounding communities may be minimized and new opportunities created. That's our To The Point report for March. Talk to your local realtor for details in your neighborhood. And tune in next month for the latest To The Point.